for like ever, right? The holy grail in finance has always been building a system that can actually beat the market, consistently. What we're looking at here might just be a blueprint for that. This isn't just an AI that crunches numbers. No. This thing thinks, it reads, and it reacts. We're going to take a peek inside a totally new kind of financial brain. Okay, get this. A trading strategy that pulls in a 135% return in just 2 years. I mean, that's not just beating the S&P 500, that's crushing it. It sounds like something out of a sci-fi movie, right? But that's the actual claim from this research paper. So the big question we've got to ask is this for real? Is it just a one-off, a lucky backtest? Or are we actually looking at the future of AI in trading? All right, so before we get into how this AI works its magic, we need to talk about why so many other strategies, well, why they fail. It really boils down to one huge problem. The market never stays the same. It's constantly changing its mood, its personality. So this slide, this basically sums up the classic problem for any trader. Think of it like this. You've got two main types of strategies. On one hand, you have trend following. These are awesome when a stock is just rocketing up or plummeting down. But the moment the market goes flat, sideways, they just get wrecked, generating tons of false signals. On the other hand, you have mean reversion. These strategies thrive in those boring, sideways markets. But the second a real, powerful trend kicks in, whoosh, they get run over. And that's the bottom line, right? Sticking to just one strategy is like trying to build a house with only a hammer. Sure, it's great for nails, but what about screws or cutting wood? It's just not going to work. When the market shifts its regime, from trending to sideways, for example, these one-trick pony strategies just fall apart. They can't adapt. So, what's the solution? Well, you don't pick just one tool. You build a system that has the entire toolbox. And more importantly, a system that knows exactly which tool to pull out at the perfect moment. You build what this paper calls a hybrid brain. Let's break down what's actually inside it. Okay, so at its core, the system starts with the basics, the stuff traders have been using for decades. We're talking about the classics, right? Your EMAs, MACD, RSI, Bollinger Bands, all the usual suspects. You can think of these as the system's eyes. They give it the raw ability to read a price chart and understand things like momentum and volatility. But, just seeing the data isn't enough. You need a brain to process it. And that's the next layer, the machine learning model called XGBoost. This is the real decision-making core. Its job is to look at all those signals from the technical indicators all at once and spot these super complex, hidden patterns that a human trader would probably miss. This is the part that actually makes the call. Okay, now this is where it gets really cool, almost like sci-fi. The system doesn't just have eyes, it has ears. And those ears are a model called FinBERT. Now, FinBERT is an AI that's been trained specifically to understand financial language. It literally reads the news, headlines, earnings reports, you name it, and figures out the sentiment. Is this good news? Bad news? This gives the system a layer of real-world context that you just can't get from looking at a price chart. So let's put it all together. You can see it in this diagram. On the left, you've got all the raw data coming in. Price charts, news articles. That stuff gets processed into technical signals and sentiment scores. And then, the XGBoost brain takes all of that information, mashes it together, and spits out the final decision. Buy, sell, or hold. It's one complete, intelligent unit. All right, so making money is great. We all love that. But you know what's maybe even more important? Not losing money. And honestly, the most impressive thing about this whole system isn't just its smart brain. It's this incredibly powerful defensive mechanism they built in. They call it the risk shield. And this quote from the paper, it just nails the problem. Picture this. The chart for Tesla looks incredible. I mean, it's screaming buy from a technical perspective. But here's the catch. On that same day, news breaks that the SEC is launching an investigation. A normal trading bot that only looks at charts, it would walk right into that disaster, completely blind. It has no idea what's happening in the real world. And that's exactly the kind of trap this hybrid system is designed to avoid. It uses a really clever two-step check, this risk shield, to protect itself from those exact situations. So here's how the shield works. It's got two layers. First up, it checks the overall market. It just asks, are we in a bearish market right now? If the 20-day average return is negative, boom, it hits the brakes. No new long trades allowed. Simple as that. The second layer is the news filter. It uses FinBERT to listen to sentiment. If the news for a particular stock suddenly turns super negative, it doesn't care how good the chart looks. It will suspend trading or even exit a position to dodge that bullet. So, to put it simply, what's FinBERT really doing? It's like a translator. It takes all this messy, unstructured text, like Apple's earnings beat estimates, which a computer can't normally understand, and it translates it into a simple, structured score: positive, neutral, or negative. It's basically taking the constant noise of the news cycle and turning it into a signal you can actually trade on. Okay, look, the theory is fantastic. A hybrid brain, a risk shield, it all sounds great on paper. But the only thing that really matters is, does it work? Does it make money? Let's dig into the numbers and see the results of the backtest. Wow. Let's just start with the big one, the headline number. Over a 2-year period, from January 2023 to January 2025, a period that had its fair share of craziness, the system returned over 135%. Just let that sink in. That is a massive number. But, a big return number doesn't tell the whole story. The real question is, how much risk did it take to get there? And that's where this table is so revealing. Look at the Sharpe ratio. That's basically a measure of your return per unit of risk. At 1.68, it's over 3 times better than the simple baseline strategy. And maybe even more importantly, look at the max drawdown. That's the biggest loss it took from a peak. It was smaller than the baseline, which means that risk shield we talked about, it's actually doing its job. So it didn't just beat some basic strategy, it beat the actual market. I mean, look at this chart. It more than doubled the return of the S&P 500. It even comfortably beat the NASDAQ 100, which had a great run. And that's the key here. This suggests the system is generating real alpha. It's not just getting lucky by riding a bull market. So when you see results like this, you realize it's bigger than just one successful experiment. This is really pointing to a fundamental change, a major shift in how trading and investing might look in the very near future. And look, the big takeaway here isn't the classic "robots are coming for our jobs" story. It's actually something way more interesting. It suggests we're moving into an era of partnership, of collaboration, a world where you combine the raw speed and data crunching power of an AI with the intuition and oversight of a human. And when you start thinking about it, the possibilities are just wild. I mean, imagine having an AI assistant that automatically finds complex chart patterns for you. Or what about explainable AI? An AI that doesn't just say buy, it tells you why it thinks you should buy. You could even have AI that helps you manage your own emotions and biases during trading. This stuff we've looked at today, it really feels like just the tip of the iceberg. Which really brings us to one final big question. We always talk about this stuff in terms of human versus machine. But maybe that's the wrong way to look at it altogether. What if the best trader of the future isn't a human and it isn't an AI, but some kind of perfect, seamless hybrid of both?